Hi, I'm Jeanne Kelly, your credit coach. And today on Credit Over Coffee, I have Sue Buswell. Hi, Sue.
Hey, Jeannie, happy to be here.
I'm so excited. I'm going to look down because I want to introduce you and give all your information because you've been a credit expert with over 30 years in the mortgage industry.
Yeah,
Amazing. And that you are a contributor of Rethink Everything You Think You Know about being a next gen loan officer. That's
correct.
so cool. And I found Sue with her hashtag Sue Knows the Score on LinkedIn. So please follow her. So much credit information. It's really, I'm in awe of everything that you're doing on LinkedIn. So congratulations. And thank you for coming on because you've been writing so much about the buy now, pay later. I'm like, I got to get Sue on. You are the expert. You are the expert regarding this topic.
Oh, thank you, Jeannie. It's a pleasure to be here. You and I connected, I want to say about a year ago, and I think I almost overwhelm people on LinkedIn with credit information. It's my only social site. And I decided when I started Sue Knows the Score that I was going to give back to the industry that gave me almost next year will be 40 years, an almost 40-year career in the mortgage credit space. So Sue Knows the Score started in November of 22. I was laid off of my mortgage job like a lot of my, peers were. And I said, I'm going to take all this information I've learned from my time with TransUnion, my time with Equifax, my time in the credit space, and I'm just going to give it to the mortgage lending community. So it's a pleasure to be here. And I'm so fortunate that we connected. Thank you for asking me to come on. And wow, buy now, pay later. We could spend all week on it, which I'm doing this week. I'm covering buy
Okay.
now, pay later again all week on LinkedIn.
Awesome. Yeah. So let's dive in because a lot of people don't even know what we're talking about. So, what about even explaining what is buy now, pay later?
Yeah. So from a credit consumer standpoint, you probably see buy now, pay later at a lot of retailers, especially in the apps, right? So I think of Amazon. You go to Amazon, you go to Wayfair, you go to one of those sites and you click, add to cart. When you check out, you get the option to choose buy now, pay later. And I've never chosen that. I always use my rewards cards on those sites because I want to make sure I can get those extra points and go visit family.
Yeah.
But some folks use that, and I think it's an interesting way. It's layaway flipped on its head. So in the old days, layaway was you
Yeah.
choose all your items, the store would hold them until you paid them off, right? And then you get them. Now with buy now, pay later, you choose your items, you get them, and you can pay them off in 4 monthly installments, interest free, without any fees. So it's a really cool process. But I think with any way that we pay comes the potential risk.
Right. So, what would you suggest? Like, if someone's looking at that
Yeah.
and they're ready to click that button, what would be another option to say, let's not do that? What would you say?
Yeah. And I would say this probably falls under your area of expertise. But for me, I always try to help people understand it's a want versus need conversation before you push that button, right?
Right.
So, do I want that or do I need that? Right. And then you have to determine it's 4 payments. Okay. Can I pay it in the 4 payments or am I going to go into an interest rate and possibly some fee situations? So just take a moment to ask that question. I had a family member who had picked out this beautiful sofa, was stalking it on Wayfair, watched for all the sales and all the discounts to happen, and pushed the buy now, pay later because they wanted the option to enjoy the sofa while they were making those 4 payments. They had budgeted for it. It worked out. It was great. It's the only direct connection that I have that have used that. So I think that's a great way to use the buy now, pay later. But if you're looking at it and you're saying it's a want and I can't pay it off in those 4 payments, then then you might want to be talking to Jeanne Kelly about a better way to balance your budget.
Okay. And yeah, when it comes to the buy now, pay later, what are their hidden fees? What about the rates? What's going
Yeah.
on?
So the majority of the providers of buy now, pay later financing provide no setup fees, no initial fees. You pay your first payment at the point of purchase, and then the rest of it's spread out in equal payments. You have to provide a pay item, whether it's your bank account or something that you're going to use to pay that off with. The majority of them, again, are 4 payments, one and done. So interest-free, no charges. It's really nice to be able to use someone else's money, right? Smart way to do it. But there are a few that are allowing you to go into 6-month, 12-month, or even 60-month payment terms. And I've seen interest rates anywhere from 6% for the lower terms all the way up to 36% interest.
36%?
36%. And some of them will finance, tens of thousands. So you have an opportunity to really quickly get in over your head with buy now, pay later. So I think we have to just, again, want versus need.
Yeah.
What is it going to cost me? Can I pay it off in the time that I've chosen to pay it off in?
Right. Yeah. Without those 36% interest, I mean, that is a talk
Right.
about a budget. Now, when it comes to the buy now, pay later, how does it affect your credit score? What are you been
That's the interesting part of it. So you and I both know this, right? But a lot of people don't know that your creditors are not required to report your information, right? A lot of them do voluntarily. And buy now, pay later, by and large, is unreported. Affirm, who you'll typically see with Amazon, is one of the few that is actually reporting. And today they're only reporting to Experian. So you can use buy now, pay later. It's initiated with a soft inquiry, no credit impact there. We have to think about 2 different parties in these buy now, pay laters. There's the benefit to the consumer and the risk to other lenders. So if buy now, pay later debt is initiated on a soft pull, your other lenders you might be applying for credit with have no idea that you've even applied for this debt. And because it's unreported, no one else knows you have this debt. And if for some reason the loan does not go into repayment, a review of a bank statement is not going to show that this is an outstanding item. So credit impacts are small because it's not on a credit report. Think about this, Jeanne. Again, you know this better than I do.
Mm-hmm.
A FICO score requires you to have a minimum 6 months of history on a current open and active account. So if you have that kind of account, fine. If buy now, pay later was being reported, you would see that. The risk to someone's score would be when this goes mainstream.
Right.
When this goes mainstream, and we know that the Consumer Finance Protection Bureau is looking at buy now, pay later. They've put some focus on this.
Mm-hmm.
So I imagine we're going to start to see more reporting. But with a FICO, the categories that I see someone having a risk in their score in being a consistent user, buy now, pay later, would be in the amount of having new debt, multiple new short-term loans, which will then impact their length of credit history. So there's some risk with buy now, pay later to a consumer as it relates to a healthy credit score.
Right. And just like what you're saying, I think a lot of people don't realize when I'm looking at an Experian and I see it over and over, like there could be 11 Affirm accounts within 1 year and no one knew. Right. So they didn't realize it was going to be on Experian and so many. It's not just, one time, okay, and then you're going to use that again. It's for each purchase. And I think that's shocking to a lot of people.
That's right. That's right. And I think what people don't understand really, and let's just take a minute to kind of dig into that a little bit more.
Yeah.
New credit, why would those 11 Affirm accounts negatively impact your score? So most people understand that a credit score is simply a risk predictor. It's risk in a numerical number, right? The higher the score, the lower the risk. So why does an appetite for new credit become a risk predictor? Well, it's the catch-22 of credit, right, Jeanne? So you have to have credit. Yeah, you got to have credit to get credit. And if you have too much credit, it's a bad thing. If you don't have enough credit, it's a bad thing, right? So you've got to really learn the rules of the game. And that's where your expertise comes into all of those consumers that you serve, right? For me, really serving the mortgage industry and trying to get them to understand if those Affirm accounts don't get reported for 30, 60, 90 days, they have no idea that those accounts could impact the debt to income ratio of their potential home buyer, right? And that just brings up a lot of issues. So the fact that it's what I call phantom debt is not only a risk to consumers, but also to lenders. So
100%.
100%. Yep.
Yeah. And I'm loving your board behind you, FICO, and the breakdown, because we're talking about 10% new credit,
10%. Yep.
you
Yep.
know,
And 15% that length of credit history. And that's really, we don't think about that as consumers, right? Because a lot of people, they want to pay their debts off as fast as they can, right? But the longest history that you have, and I say this a lot in the mortgage lenders that I talk to, that credit card from when you were 18, 19, 20 years old, if you didn't blow that thing up and you still have it, I have one from my mid 20s. So,
nice
between you and
history.
me, that's 30 years ago. So, I
Yeah.
keep that thing active. If I close that account, I have one continual pay on that, and that's it. I don't use it for other purchases. It's just keeping it active, pay it in full every month. That's my longest history, because for most people, their longest history account is their mortgage loan or a car loan. But when you pay it off and that debt stops reporting and stops having activity, it doesn't help your credit. So here you have 11 Affirm accounts and there are 4 payments, right? So it's a shock to your score when they all come on the credit report, and then it's a bang on the backside of it because you're losing that history.
Right. Yeah. I mean, that's a high risk for your credit score. And again, at the moment, we're talking about only on one credit reporting agency.
One bureau.
At the moment,
Right.
So now, what do you think when it comes to handling a credit dispute with that account? When you see, let's just say, one late payment in, the previous month, brand new, recently.
Yeah. So again, I mentioned that the Consumer Financial Protection Bureau Director Chopra is starting to, the entire industry is starting to pull buy now, pay later, and he has classified them as credit cards, revolving debt. So they've made that classification. That means that those late fees are going to be capped, just like they did to revolving credit cards. So, a few months ago when I first started reporting on buy now, pay later, I was seeing that late fees could be $35 for your initial, but by this classification, those possible late fees from a delinquent payment will be reduced. So what's the risk to the consumer? It's a financial risk because they're going to be hit with that charge. And of course, it gets added to your balance. And if you've gone off of the 4-month interest-free program, then you're going to be paying interest on a late fee if you don't pay that off right away. That's the financial risk. The credit risk at this point is nominal because only Affirm is reporting to one bureau. So, if you're with someone like Sezzle or one of those other providers, then it's just a financial impact.
Right.
The issue is that they're not widely reported. And we talked a little bit about the FICO score, but I think we all know that Vantage score is out there, and that's used by, and I could flip my board and do the Vantage score for you.
Yeah, we have to mention them.
The Vantage score scores you with just one account with 1 month of history in the last 24 months. So if buy now, pay later were more widely reported, I think we would see more score impacts on Vantage score. And the 3.0 version is different than the 4.0 that will be adopted into mortgage, end of next year. But that version puts a little higher weight on new credit, and it puts a higher weight on your payment, your length of credit history. So we're going to see some of that credit monitoring scores, I think, impacted when buy now, pay later start to be reported mainstream on credit reports.
Yeah. And this is the summer of 2024 when I have you on, and I can't wait to have you back. And it will be when there's going to be changes. We're going to see so many changes, and I know you'll be reporting it right away. And we'll have to hear, because right now, as you're saying, on one report at the moment, it seems one creditor at the moment. But what's going to happen in September or November. We don't know yet,
That's
but
right.
we'll have to talk about it because changes are going to be happening.
Absolutely. And they've been happening. I think I first reported buy now, pay later 5 months ago. And I typically don't go back to a topic so soon and re-report it, but there's so much data, and there's buy now, pay later companies that are closing because the delinquency rates can be extremely high. So it's a high risk product for the merchant. It can be a high risk use for the consumer. So a lot will be coming on buy now, pay later.
And who would you think uses the buy now, pay later more often?
That's interesting. I actually did a post this morning. I found a survey, and you can go out to my LinkedIn site, just Sue Buswell, and you'll see the post. But it was talking about the credit/financially fragile. And that those individuals tend to have less money in their checking account, somewhere in the neighborhood of $2,700 in their checking account versus $6,300 for non-users. So, those people are also using it to pay for their everyday. It's not that want versus need. It's like, I need to have groceries. I need to have household items. I can't afford to buy it without. They also tend to have a bankruptcy within the past year. And their FICO scores are 700 or below. So that's the technical profile of these people, but they have to look at the fact that buy now, pay later is used by every generation that we have. When they go from, the silent generation all the way down to our Gen Zs, millennials are the top users. And the incomes are up to 70,000. So it's like 55 to 70,000. Those are your typical buy now, pay later users. And I think that makes sense to you and I, because we know that the economic pressures are on those, what would be considered middle income earners, right?
Okay. Right. Yeah. And what do you think when it comes to the buy now, pay later, when it comes to fraud, identity theft at that checkout?
We're never going to escape fraud and identity theft. I was 18 years old when I walked into a TransUnion credit bureau and got my first job as a file clerk. I didn't know credit from anything, right? My previous job was probably flipping burgers. So I grew up in the credit space, and fraud really and identity theft really wasn't talked about in the mid 80s. In the same way that it is today. But that's because everything's digital, everything's online, and data is there for the taking if they know how to do it. So, you're in Amazon, you're under your login, you're doing checkout. You have two ways to check out. You check out with your credit card, and then you check out with this app, which is Affirm to put it on there. Can your information be, manipulated? Of course it can. I have not found any reporting on a higher instance of fraud or identity theft in buy now, pay later. But we have to remember that a lot of these buy now, pay later apps are new to the financial industry as well. I'm quite sure that they're required to go through all the SOC 2 requirements and all of the back end, security protocols to avoid a data breach. But, we've seen our major credit bureaus have significant data breaches. So it's out there. The risk is there. Anytime you do anything online, the risk is there. You can protect yourself by making sure that it's a secure checkout, ensuring that you're verifying all of the information with the creditor, with the provider, and just try to protect yourself as much as you can. So unfortunately, I'm not able to really give you a good answer there, but just some generalities. I'm not seeing a bigger increase in that space.
You know what I've seen, Sue? That people will come to me and it'll be on their credit report, and they'll realize maybe their teenager checked out on the family computer.
Oh yeah.
Realize, and didn't know, and then they didn't know it had to be paid. And, maybe one of the parents used that at one time. So I've seen that many, 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 many times. And, it's, just a simple mistake of, oh yeah, I did tell my daughter she was logging in. I said she could buy it, but the parent didn't do the checkout. The kid didn't know what was going on. Click, click, I don't understand,
That's
exactly
really
how it happened.
interesting, Jeannie. What happened? Because one of the things that the CFPB, as they said, they're pulling buy now, pay later into, and they're saying, you have to send billing statements.
Mhm.
So when they go through, I've never gone through a buy now, pay later checkout. So,
Right.
I'm reporting on something that I haven't experienced myself, but I'm assuming that consumer would have gotten some sort of notification of a bill. And if they didn't, and this is something that's negatively impacting their credit report because they didn't, I would strongly suggest that they contact the Consumer Financial Protection Bureau,
Of
because
course.
I will tell you, those guys are all over this BNPL right now.
Right. Well, a lot of times, but the problem is they will send it, but then the parent, let's just say, from this is all, what I'm hearing.
Right,
I saw that. I didn't know what it was. I knew that I had something, but I paid that a year ago. It
right.
went into my spam. I never received all of my billing I get in the mail. I actually choose not to do electronic because I'm fearful of it going in. These are the things I've been hearing. So
I
they had
understand.
no idea. Then they try to contact and they're having a difficult time dealing with customer service and this is again what I'm hearing. This is all new because it is only on Experian. So sometimes
Hmm.
I'm not hearing it across the board. But when I've been looking at reports, and it's so often someone just not understanding how the buy now, pay later system is working, not
Right.
realizing it's credit reported, maybe being a little sloppy you know, where they're thinking, oh, well, it's not on my credit. Not that I'm saying they shouldn't be paying everything on time, but this is why, yeah, just
It's
so
just the
much.
human experience. We're just
Yeah.
humaning, right? That's all we're
Right.
doing. So
Yeah.
I think there's a lot to unpack there, and it's really interesting. I would definitely file a dispute. I think
Right.
even though it's the only merchant right now or
Mhm.
creditor, I mean, these are apps. These are apps that have become a financial vehicle.
Right.
And when you think about going to a bank and taking out a loan, right? A bank has a recovery department. They have all of those systems in place. A lot of these apps don't, they have the point of sale purchase, the 4 months. Anything after that, they're dependent on a third party collection agency. So I would
Mhm.
imagine that your customers may be seeing those accounts coming up that they didn't know about with a collection agency,
Right.
right?
Right.
And I think there's all of the ways to work through that,
Yeah.
right? I wasn't aware of
Exactly.
the debt. I was never notified. I didn't know it until it showed up on my credit report. And there's some good ways to manage the removal of that debt upon
Right.
payment, right?
Yeah.
With that type of
Totally. Roll up your
information.
sleeves, get ready to get some work done. But
That's
it's
right.
something
That's
that can be done. Now, so
right.
I always end with asking, and you said a little bit about it, but
Yeah.
how did you start learning about credit?
So I think I learned a little bit about money management. I'll start there, right? Because money management and credit really go hand in hand. So my mom created a chore board for us, right? When you get to a certain age, you want to earn money. I was with my 8-year-old nephew and 11-year-old niece this week, and they wanted to earn some money while I was there. And I was like, great. You go upstairs and clean up the upstairs. Anything that's not where it should be, you put it where it should be, make it right, make the bed, all of that kind of stuff, straighten it up, right? You come downstairs, you do the same thing. It's $5 per floor, right? So they went upstairs. I know, right? It's today's wages. They went upstairs and they did their thing and they came back down and I was getting ready to hand them their money. And I said, now this is contingent. And so I've learned those things kind of from my mom. They're like, what does contingent mean? I mean, I said, it means depends on. It depends on a situation. The situation is it depends on this house staying clean the whole time we're here. So you guys can have your money now, kind of like buy now, pay later. But if the house gets messy and you don't take care of it, I'm going to take it back. So I learned a little bit about financial management from my mom in that way of like, you vacuum, you earn this much. But here I am, 18 years old, and I'm ready to adult and get a real job. And I walk into a TransUnion. What they were called back then was affiliate, meaning local owners owned the data for that area. So I walked into that bureau, applied to be a file clerk, typed 5 words a minute. They made me come back, or they gave me the opportunity to practice. I did, went home and practiced, came back to 10 words a minute. And they said that shows us you're willing to learn, you have the job. And that kicked off my, learning. I was able to work in the TransUnion system and actually understand how creditors report. Here I am reading a credit report to someone. I don't even know what it means. I finally get
Oh,
my own credit card and and I'm off and running. So it was a really great way to grow up in the credit industry. And I still made mistakes, of course, right? Because it's one thing to know it and work in it, another thing to live it. So it's just been a long time learning. And as I said at the beginning, that's why I try to take everything I've learned professionally, personally, put it out there on LinkedIn and help others.
Yeah. Well, you do a fantastic job. I've been a fan of yours since the moment I found you. I love Sue Knows the Score. I love your posts. So much information. Congratulations. Everyone follow her. I will have your links, everything in the podcast. And until again, we know we're going to talk more, Sue.
I love it. Yes, let's do it. We can, I think we could do this all day. Bye-bye.
Bye.